and welcome to Real Turkey channel. This is Atilla Yeşilada. Today we're going to talk about Turkey's economic stability program. As you know, after the May elections, our President Recep Tayyip Erdogan appointed Mehmet Şimşek as the economy czar and Ms. Gaye Erkan, an accomplished investment banker, as the central bank governor, and this duo is supervised by Cevdet Yılmaz, the vice president. Since then, they really worked hard to undo the mistakes of Erdogan era and to carry Turkey towards a sustainable future, which is called a stability program. Now, they're certainly reaping the first fruits of their labors, but today's video is more focused on the developments at the external background, which is going to accelerate the success of the program. In particular, I'm going to talk about the Fed pivot and the current or impending collapse in energy prices and their impact on the Turkish economy and thereby on the success of the austerity program. Now, when we're talking about Turkey, three major problems immediately emerge. A, current account deficit and its financing. B, high inflation. 3, budget deficits. By the way, I shared an excellent video on Turkey's budget nightmare, which no one watched, so it's still fresh. Maybe you want to take a look at it. Now, the Fed pivot, as announced by Chairman Powell, and the recent decline in oil prices, albeit sporadically because of Houthi attacks on tankers in the Red Sea, are very important developments in terms of reducing the current account deficit and inflation. Allow me to explain. Turkey imports almost all of her energy. I think by the end of the year, Turkey's energy import bill will be roughly $50 billion. 2, inflation, as everywhere else, is largely driven by energy and food prices, and of course, cheaper energy prices decelerate inflation. Why is the Fed pivot important? Turkey is also a country that's heavily indebted. If a country generates chronic current account deficits, that's inevitable. Obviously, we're not going to pay these off from our natural resources, of which we have none. So we'll have to continue to borrow from abroad to cover our current account deficits. And of course, it matters how available international financing is to a country like Turkey, which is rated junk by all credit agencies, and what the cost of money is in terms of financing the current account deficit. Now, Fed pivot in that regard is very important. Turkey has to roll over its maturing foreign debt, which is roughly 20% of its GDP, roughly $200 billion within the next 12 months. Now, obviously, there is an important difference between the two environments. A, one in which Fed sticks to tight monetary policy and rates rise, but more importantly, credit becomes rationed to high credit borrowers. Now, from this kind of environment, we're switching to a losing money environment where lenders are not as picky in terms of their borrowers and the cost of money is declining. It's hard not to see how this is going to affect Turkey's current account financing. So let me summarize it here. A, you have a current account deficit which, ceteris paribus, meaning everything else remaining constant, is going to decline based on my theory of declining oil prices, of which I will say more in a few minutes. B, regardless of its size, it becomes easier to finance it because international lenders are more generous towards low credibility borrowers like Turkey, and the cost of money is expected to decline. Now, oil prices, I mentioned their impact on Turkey's current account deficit, but they also affect inflation. In fact, obviously, this is a rough estimate, but prior to the recent developments in the oil market, I was penciling in an end 2024 CPI rate of 50% for Turkey. Now I revised that downwards to 45%. Why do I think oil prices are going to decline when there has been a pickup in prices over the last 3 days because of attacks on, oil-carrying tankers in the Red Sea and the Aden, Horn of Aden, I believe it's called. I'm not very sure. Well, clearly these are risks as well as the Ukraine war, which may inflame energy prices again. But this is not the best case scenario. In my best case scenario, in 2024, oil prices will be dictated by the imbalance between supply and demand. And supply is increasing much faster than anticipated demand. World oil demand is fairly easy to forecast. It grows roughly by 900 1,000 barrels per annum. But supply is, a much more ambiguous question because there are a lot of countries which can ramp up or ramp down production. And recently, the American shale producer has entered the market as a swing producer. And contrary to all expectations, American shale production is up close to 700,000 barrels per day this year, and I don't think it's going to shrink in any meaningful next year. So the ability of OPEC plus one, that's OPEC plus Russia, control the prices at their desired level of roughly $90 per barrel in terms of Brent crude is very much in doubt. I've checked a lot of forecasts. $70 per barrel for Brent sounds very good. This is compared to this year's average of roughly $80. And there is a rule of thumb in Turkish economy. Every $10 change in Brent oil price affects the current account deficit or surplus to the tune of $3.5 billion. So, even if Brent stays at around $70, Turkish current account deficit is going to decline by 10% vis-a-vis the consensus expectation of $30 billion next year. It could go much lower. In 2014, Saudi Arabia realized that it cannot control the growth of American shale producers and decided to get rid of all production quotas and just flooded the market with oil. Remember when Brent fell to $9, I think it is the very bottom, and the futures markets even priced oil in negative prices in future months. I don't expect that to happen, but it's more likely that oil prices will fare below $70 per barrel than higher. We don't have a clear-cut picture of how much oil prices affect Turkish inflation because you also have to calculate the natural gas and how much of the natural gas price changes are reflected to major inflation items like, household heating and lighting. We don't know these variables, but clearly a decline in oil and natural gas prices is a major positive for inflation picture. Also, I recently read a study about the American consumer. It appears that the primary factor for them in determining their inflation expectations is pump prices. I don't think it's much different in Turkey because Turks are crazy about their autos as much as Americans. So in addition to the direct impact of lower oil prices feeding through to the inflation complex, you also have this inflationary impact where people think, pump prices are going down. My heating bill is not going up. So inflation must be stabilizing, and that would be an incredible gain for Turkish economy. Now, this is not to say that Mehmet Şimşek and Gaye Erkan are doing really, honestly, very short of miracles to steer the Turkish economy right. I may sound like a shrill or pro-AKP government tech, but I suppose if you watch any of my videos, you would believe that I'm not so. But I think, credit where credit is due, and Mehmet Şimşek and Gaye Erkan are doing a stellar job. Everybody's talking about Turkey's rate hikes, which are not done and they are not sufficient, but compared to a period where we believed as a nation that to reduce inflation we need to reduce interest rates, going from 8.5% policy rate to 40% is a miracle, and Gaye Erkan engineered that. But more importantly, deposit rates, Turkish deposit rates have increased much faster than policy rate. Currently, the gross annualized yield on TL deposits is well above 50%, and that's causing Turkish retail investors and savers switch from FX to Turkish lira deposits, which reduces the pressure on the currency market. In addition to monetary policy, thanks to Mehmet Şimşek and Gaye Erkan's efforts, Turkey has been able to borrow from abroad, and the central bank has largely replenished its FX reserves, so it has a very strong ammunition to tide Turkey over the winter, and it switched to a crawling peg where it controls the rate of devaluation. Of course, when a currency appreciates, it automatically reduces inflation. Turkish lira is not appreciating, but it's appreciating in real terms, which means its impact on inflation is becoming much less by the day. And I think that policy is sustainable and it will be maintained through 1924. And voila, foreign investors are noticing. According to last week's data, Turkey had the biggest weekly inflow of foreign funds into bond and stock exchanges to the total of $1.5 billion. And I think it was the last time we had such an inflow in a week was before Berat Albayrak, so in 2018, 2017. And that's an achievement. And judging by the articles I read in publications like Bloomberg, Financial Times, Reuters, etc., etc., not Wall Street Journal because I can't afford the subscription. Foreign investors do pay a lot of interest to Turkey, and I expect foreign inflows to Turkey to accelerate in the coming months, which would also not only reduce inflation, but also stabilize the currency and, of course, help finance the current account deficit. A less visible success of this program or this team is the ability of Turkish government, treasury, Turkish non-financial corporates, and Turkish banks to borrow abroad. Since 2017, Turkish private sector has been deleveraging, which means whenever a loan or a bond matures, the borrower borrows less than the principal amount of the loan and the bond. Now this is changing. I mean, on an annual basis, banks and corporates have reached 100% rollover ratio, which means, when a bond matures, they borrow as much as they are paying out, which means that you can finance the current account deficit at this rate infinitely. And if you look at the 3-month moving average data, in fact, banks and corporates have increased their net borrowing. So Turkey is once again increasing borrowing. And another important point here is that the reason why Turkish corporates and banks want to borrow more is not because they're short of dollar liquidity, because probably they think private sector fixed investment is going up. So they're, building up ammunition. Another success that's not that visible is that despite my previous video, which explained about the long-term black holes in Turkey's budget, fiscal deficits have been stabilized. We expected, the consensus was somewhere around 6% of a budget deficit that's equal to 6% of GDP at the end of the year. It will be probably roughly 3%. Now, part of it is due because earthquake spending has slowed down, but a lot of it is due because Mehmet Şimşek bravely raised taxes, and there's some spending constraint, though, of course, I would like to see more. And I think at the end, perhaps the biggest achievement of this program is that it made a believer out of Erdogan. I know anyone who follows Turkey for any reason, largely because of business reasons, is very reluctant to invest into Turkey at this point, simply because Erdogan flip-flops frequently. There is no guarantee that Mehmet Şimşek and Gaye Erkan will not be fired tomorrow. But I think to the extent that the program is successful and Turkey is receiving international plaudits, international praise, Mr. Erdogan is more likely than not to stick with this theme. And I believe if we can survive the local elections end of March 2024, there is a video below there, last chance of democracy, and Mr. Erdogan emerges victorious, then Mehmet Şimşek and Gaye Erkan will remain in their posts infinitely. Now, take a favorable international environment. I hope it lasts. I'm much less certain about that than Turkish developments. And a program that's showing results on the ground, which changes expectations in the positive direction, in the very near future, Turkish economy can be stabilized. I mean, by the end of 2024, 2% growth with 40% inflation is possible. Compare that to 4% growth and 70% inflation. I think that's a visible improvement. Well, this has been my broadcast about the recent developments in Turkish economy. I want to thank everyone for watching Real Turkey channel. Subscribe, like, share it with others who might be interested in Turkey. And season's greetings to all of you.